I think that if you look at the market as a whole in Asia Pacific, the market itself does have significant tools and committees and process in place to protect organisations, specifically banks and FSI, in those markets. However, with the rapidly changing scene in cybersecurity and cybercrime, and the constant press around people exploiting companies and individuals, they're not doing enough, to put it frankly. They need to do more. They need to be more involved. They need to share more information at all levels, from C-level down to the engineering level. Security is potentially a loophole and an access point for hackers and for people who want to exploit FSI. And at the moment, I don't think that it's a serious concern at this moment in time, today, but I can tell you it's coming. And in the next 3 months, 6 months, 9 months, a year, with BYOD plans put in place by most banks now, it's going to be significant. And the hackers will look to exploit access points through mobility rather than the traditional methods of laptops, desktops and servers. And they're not sufficient just the way that the legal system isn't sufficient in dealing with the internet and the Internet of Things and BYOD. The legal system still drags its feet in process terms and operational terms, many years behind technology and technology companies. So the technology companies are really pushing the boundaries of what is achievable, and it's giving real challenges to the legal community and to the finance community. And the finance community aren't doing enough to keep up to date. They are making efforts, significant efforts in some cases, but not enough to deal with these issues. An area would have to be the number of transactions that are taking place within the banking community, because they're at risk, because individuals operate from around the world and from home and external to the bank's security policies and procedures in effect. So the real threat with banking for me, and I would suspect it would be in the area of their customers and the customer transactions as being the number one area. It's not a case of if you get breached, it's a case of when you get breached. The recent comment by the head of the CIA was that 90% of companies have accepted they've been breached and 10% tell lies. And that's probably accurate. I would say that most companies get breached in some capacity. Are the tools sufficient to protect them? No, because no tools are sufficient to protect. You cannot stop anyone coming into your organization if they have set their mind to it and they have the resources and the money and the forethought to actually want to get in. So you're not going to stop them. The key thing to do is to understand how these people get in and monitor their performance internally and then get them out of the company as quickly as possible. And the tools that a lot of the banks have at the moment don't cover that sufficiently. They stop them by putting a brick wall in front of them, but they climb the brick wall. They find links in the brick wall and holes in the brick wall to get through. So what you need is a security intelligence platform that can assess what is at risk, who can address it, and how you react to that, and what your postural profile is in terms of security intelligence. I think today it looks a certain way, and in a few years' time it'll look very different, and a few years ago it looked very different. But today, and for the next couple of years, it's got to look like a machine-based analytics and security intelligence platform is deployed in all companies. So they can assess and see a valid picture of their enterprise, their domain, their infrastructure, and their people, and effectively manage access points and areas of data concentration, like databases and credit card information. They can see this from a real-time security intelligence product, and that's the only tool that will give them that vision and that view of their infrastructure. Once that's in place, then you can take remedial action. You can take the action that's needed to either get these people out, track them, follow them, or hand them over to the officials in law enforcement to deal with them. But that's the only way to do it, and most companies don't have an effective security intelligence platform. One of the problems with analytics is there's a lot of data to sort through, especially machine data. So that's being log data that's being pushed into the company. And a typical company might have 100 million logs a day. It's not effective and hasn't been effective in the last 10 years having someone sitting there doing a search for a bad guy, because it can take for hours and hours and hours to search through millions and millions of logs. So what we've got at LogRhythm is a machine-based approach. Our machine tools, our software and hardware, analyzes all of the data in real time. So the machine analytics interprets the information it reads, thereby not requiring an individual to sit there searching. What it does do is 97% of it pretty much is noise. It's log noise, and it's not really any bad guys. And that's what your machine analytics will report to you, that all things are looking quite good, except 3% are things that we don't know about and shouldn't be happening. And there's a potential breach or a piece of malware or a bad actor or someone coming into the organization or some compromised credentials. You'll get about 3% and the machine will give you that information. So then your people can be deployed effectively, more effectively, on those 3% rather than trying to trawl through the 97%. The value behind it is, once you've got the compliance needed from your infrastructure, so once you're monitoring and understanding what your infrastructure is and who's using it and who's accessing which resources, you can start to leverage that position from an audit perspective and provide really effective audit trails and audit management to your C-level or to your board or to your CEOs or to the agencies that you're required to report to more effectively with security intelligence than you can in standalone reporting